Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart. And, we come to the question now that we have come to so many different times at 1300, 1400, 1500, on and on and on. Does the market feel comfortable trading over 2100, or does it need to come back under 2100? Feel out some of these lower levels now that we've broken through, and then go back up and continue what's really been business as usual for the bulls for going on 3 years now. My inclination, simply because you see the upper Bollinger Band really starting to run away from price. It's 25 handles. Just at first blush, it would take a move of 30 to 35 handles to touch the upper band. Is that this touch of upper band, this consolidation, if this breakout attempt here can't sustain itself over 2100 today, then what you're going to see is a move back down to test these lows down at 82. And if that should break down, you will see a slower move. It will not be, I don't see a quick move, although that would be very typical of the uptrend pattern in the last couple of years. You go up for 20 days, you go down for 2 days, and you bounce it. If that was to happen, then you could see a quick move down to the mid-band. What I think is more likely is that you'll see a struggle down to the mid-band, something that's very difficult to hold if you're a short, something that doesn't feel good. You'll be miserable while you make money if you're short, and at the same time creating enough of a two-sided action to keep all the dip buyers interested and able to trade in and out of their positions. The bears have really set themselves up for a very long year if they can't get back below 2100 and stay there. They have given up, again, effectively every potential resistance zone that was available to them over the course of the last 2 weeks. And now they're in a position where the most logical reason for a pullback is the distance of the rally. Well, we've gone up X handles, we need to pull back. We really don't. We really don't. Which is why you have to be so careful and risk conscious if you're going to be a short in this market, because you are inevitably going to be early if you're trying to do something that is a multi-day. And you have to look at it, if you're one of these people that just has one account, you have to look at it and say, how much opportunity am I missing out on by not just coming in the morning and buying that dip? Friday we dipped down, did as low as 82. We were able to get in 84.5. Very nice trade over the course of the day. I would argue that that is a much nicer way to spend your day than sweating a longer term short. So I always have things on in different time frames. I have a longer term short going. It's very small, but during the days, I'm trading long and short. So in the long trade, it's been working very well. The inability of the bears to keep the market below the opening RTH print has been a great dip buy for the last 6 sessions. Whether that continues, who knows? Just when you get the market figured out, it does something different, and it's our job to figure out what the next thing is going to be and to take advantage of that. So maybe that goes away. The only way the dynamic of what's happening here changes is if we start to make morning highs that get sold and turn into lower lows, and that those lower lows beget lower highs and lower lows, and you start a stair step down versus what we've had exclusively, which is a stair step up. Okay. Everybody have a great day. Have a great trading week. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.